let's fast forward a little bit to kind of as you said, we're all still learning. We're all still students, and there's no such thing as perfection in this game. It's really about, okay, doing that post analysis. What can you learn? So what's some of your post analysis uncovered for you in terms of some of the recent things for you, Dave?
Well, looking at a few recent trades, like literally over the past several months, I wonder if we could take a look at, for instance, ARM Holdings, ARM.
Hmm.
And speaking of mistakes, you're absolutely right, Justin. In fact, I had lunch with a mutual friend of ours recently, Alex Marenko.
Oh
Alex
yeah.
Marenko being right, a former portfolio manager, former trainer, actually for Bill O'Neill as well. And he was trying to explain what IBD style investing is all about to a newbie, and he said, "We are in the business of making mistakes. You're just going to have to accept you're making mistakes, and a mistake could simply be, okay, you bought the stock, you're down 7%, you cut the loss. That's a mistake because you went in there trying to make money. But the mistake I want to show you is not getting back into what turned out to be a wonderful gainer over the past you know 5 6 months. So
Hmm.
I took some notes on this trade, and ARM, obviously not an IPO for the first time. It actually came back to the public market after being held by SoftBank CEO, and the the stock really had just a so-so start after the IPO at $51, formed that kind of base that was at the time just an ordinary cup with handle. Nonetheless, cup with handle that formed 64.92 entry. I started buying it at the end of November, made just a few shares as a scalp buy, and then really put on a little bit more size on both December 12th and December 15th. And if you look at a daily chart, that was pretty much when it was breaking out of this cup with handle at around 65. But one thing that I should have done was not look at it too often. And the stock, even though you can't really tell on this chart because of the scaling, it was very volatile. It could move 3 5% up or down each day, and I got shaken out just 4 or 5 days later. Now, the there was a wash basically, but as you can see on that chart, not once did it violate any IBD defensive sell rules, such as cut your loss. It never fell below the 50-day moving average. It just moved kind of sideways for a while, but eventually got support at the 21-day exponential moving average. And then by the time that earnings were going to be announced in, I think it was early February, anyone who had actually bought correctly right around 65 would have had a gain of over 14 15% heading into earnings. And from my point of view, even for a newer stock, a tech stock, a volatile stock, to me, I think that's plenty of profit cushion to go into earnings. And wow, what a response! I mean, this looks like a true rocket ship, right? Right, guys.
Hmm.
After reported a solid Q4 earnings and sales growth, it jumped 47% on February 8th, and I wasn't there. I wasn't there despite the fact that I bought it correctly and I didn't have the patience. So this happens when, for at least personally for me, when I have not done as much research into a company in which I feel like I should have a lot of high conviction. Why would I have conviction in something like this? Well, one, it's a newer issue. Two, it's part of this incredible new transformation of the semiconductor industry, and it's part of possibly this new wave of AI technology. And just doing even a little more research would have probably given me a lot more uh, willingness to be patient and just hold the stock, even though for weeks I would not have been up more than a couple percent.
Yeah. So do you? I mean, certainly the extra volatility that often comes with IPOs. can be something that's difficult to handle. Do you kind of have different rules for IPOs that you use?
That's a great question. I think it's going to depend on the company. And one example is Nextracker. You know, NXT is a
Hmm.
stock I made some decent profits in NXT, and you know, this one perhaps makes ARM look like a Dow Jones stock, right? I mean, this one is just so off the charts in terms of day-to-day swings. Uh, so I never established the sort of size of the initial position in Nextracker as I had with ARM. And maybe that was my own mistake because sometimes I feel like one of the biggest mistakes I have made over the years, despite having some success in the IBD methodology, is to n not have the same size position within my portfolio on that initial buy within IPOs, Justin. And
Yeah.
the reason is you just don't know which one is going to be a 10% gainer or going to be a 5% loss for you or a 50 to 100% mover. And you can see this one had a move. I felt like my entry was good because I traded the stock when it crossed a trend line within the base. I didn't buy it on an actual breakout to new highs because thinking that this is a solar stock, commodities, probably a little more volatile, a lot of external news that could you know uh, really make this stock hard to hold. Uh, that was a good strategy, but in retrospect, I would have a much more satisfying return overall in the portfolio if I treated it with the same level of importance or with the same amount of conviction as I did with ARM. And so, and then in reverse, maybe the position size for me in ARM was too big. Maybe having a smaller position and then just maybe watch it once a day or even just wait for the end of the week to see how it behaved on a weekly basis could have been a better strategy.
Right. How about you, Rusha? Do you, Bill often
Well,
said, this concept of kind of starting all positions at the same level, roughly is a good thing because you don't know who the winner is
right.
going to be. Let the market tell you. Is that something that you employ yourself?
Um, Not always.
Mhm,
For especially like for IPOs, I will go smaller, and
mhm.
even for and David and I kind of suffered the same fate with ARM. Um, I did the same. I did very similar kind of thing as David here, where I bought it well. I was in it for a bunch of this time, and I was kind of trading around the position too. And I think the key thing for me why it was working pretty well for a while was I wasn't watching it that much. So that volatility was
Yeah.
I was focused more like on Nvidia and some other stocks, right? And so like ARM kind of doing its thing. And so when it kind of ran up to 78, I was like, oh, let me take some off. When it came back in, I was kind of like trying to do like Charles when it pulled back. I bought my position back to a full position. When it traded up again to 79, I sold half of it, and I said, I'll just buy it back when it came back in. But for whatever reason, I kind of lost track of the plan, and when it pulled back, I think I got shaken out and I didn't buy it back.
Mhm.
And when they reported earnings, I had forgotten that I did that. And so I still thought I had some shares. And I was just sick when I did that. It's like, it
So
was
so
like,
so you celebrated, and then you looked at your account and said,
I
"Well,
was
hey,
like,
why
"Oh,
am
I
I
think
not
I
going
was like,
up?"
yeah, I have some shares in this other account where I don't watch it that much." And
Right.
and so I think that's one of those lessons that I try to tell myself is that it, the you have to, well, at least I try to slow myself down sometimes with selling, because sometimes you're doing like 20 different things, right?
Yeah.
Where we're not just watching the markets and things like that. So you almost have to manage your state of mind, where sometimes maybe some other stocks are getting hit and you're like, okay, let me cut out that. But you're almost in this selling mode where, like, you know what, everything sucks now. I'm just going to get rid of everything, right? And it's so easy to just sell everything.
Yeah.
And so that's what happened with ARM, where I think I was just so distracted with a number of other things with work and all this kind of stuff that I was just like, you know what, let me just get out of ARM. now, and then I'll buy it back when it pulls back. And then when it pulled back and did exactly what I was looking for, I forgot that part of the plan.
Right.
And I was like, I'll wait a little bit longer, and then it took off. So it's so you can in a second you can get out those positions, and you almost have to catch yourself. And that's why a lot of times, for the most part, I like to scale out of positions and scale back in them, and not try to do everything all at once. But almost always at the lows of markets or lows of pullbacks, I kind of panic out of these things too. So you almost have to that's kind of that knowing yourself and stuff like that, and trying
Right.
to do your best to kind of slow those down. I still haven't really been able to fix those kind of reactions sometimes, but
Mhm.
being aware of that, I think, is a big lesson, because you almost have to, over a number of years, and you guys, 4 years, 5 years, kind of learning. And I think that's a learning curve for all of us, once we kind of wrap our head around it. But you almost have to go through a few cycles to learn how you react to stock movements, right?
Mhm.
It's not necessarily just a stock, it's how you're reacting to these movements. So they're really volatile. Are you getting too excited when they're going up and down? So you have to almost catch yourself and kind of write some own rules for yourself to manage yourself, right? The
Yeah.
stocks are going to do their things, but it's up to you how you manage and how you react in those kind of situations, because they're going to keep coming over and over again. And so, yeah, ARM was just kind of one of those spontaneous. I'm just so busy. I'm just going to sell it, and I'll come back into it later. And it was a huge mistake on my part.
Mhm.
Hey,
And, to your
Rusha,
point, a lot of times it's hard because, like you said, you had a plan
Yep.
that, oh, if it pulls back, if it does this, then I will do this. But
Yep.
sometimes it's hard to implement your plan. And you have
Yeah.
to recognize, am I asking myself to do something that I'm not going to do? Like,
Right.
it's like, oh, hey, my plan is to do, 20 pull-ups tonight. Guess what? That's not possible.
Just I can tell you right now, Justin, just strike that from your
Yeah,
plan.
yeah, exactly.
Right. Yeah.
That's just not possible right now. So, you have to
Yes,
kind of make sure you're giving yourself something that you can actually follow. And
that's true.
it's also sometimes you can look back and say, "Oh, I should have bought on this pullback. I was thinking about that." But it's hard to counteract all the emotions that go in with the fact that you probably had a lot of things pulling back on you at the same time that
Yeah.
kind of caused you to lose your positions. It's not just
That's the
one
bigger
stock.
thing. Yeah, I
Yeah.
mean, I'm able to do that, so that part of the plan wasn't fun. It's just those moments of weakness, just those it's just those kind of distractions, moment of
Yeah.
weakness, where you just kind of lose sight of what kind of larger plan was. And
Yeah.
David, you were going to say something?
Yeah, well, Justin's points were excellent, and on top of what I feel was a really a mini treasure chest of nuggets that you provided, Yerusha, following how I muffed up ARM, and I just want to add just one extra lesson that may be helpful for a lot of people, and is that when I initially made the position a serious position with my portfolio, we're talking 10-15% position within
Hmm.
my
Yeah,
my own account. uh, I happened to be on vacation in Hawaii, and I
Mm.
didn't want to be in front of my screen the whole time. I just wanted to spend a little time watching the market and then have some fun, right? So that actually puts more pressure on you to maybe trade
that's
or
true.
just make a decision based on a limited amount of time. In retrospect, I might have done much better in the stock if I totally ignored it, not even knew it broke out, and then come back from vacation well rested and ready to look at charts significantly, because you look at the action in ARM for almost 3 months. It was backing and filling. It was not making that big a gain, even though it might have meant a lot of anticipation and hype. But ultimately, the chart showed that there was support, and there were multiple times to uh, establish a position before this incredible move on earnings.